I don't know. If we think back about what we just delivered, we delivered 99 million net revenue for the quarter, and that's significant. I think where we missed is we provided guidance of between 100 and 107, and I think our ancillary business is where we fell short. And it wasn't because that business isn't generating revenue. They generated a lot of revenue for us, for Aurora. So on a consolidated basis, that gets backed out. And that's not a significant part, obviously, of our revenue. What is significant, however, is our cannabis revenues. We delivered at the top end of the range that we guided at $95 million, and that is the biggest posted number right now in our sector. And we're very excited and proud, obviously, to show that 61% growth quarter over quarter. In addition to that, we delivered some very important key performance indicators that indicate our company continues to grow at an alarming rate. Our gross margins are up close to 60%, and again, that is far exceeding any of our peers. Our cash cost to produce. Our cash cost per gram, to produce has fallen another 20% to $1.14, and even as much as $1 at our Sky facility, and that continues to drive real, future margins in our business. Our patient numbers are up, so we're very excited about obviously how we see the future based on how we're tracking quarter over quarter.
All right, so I asked you the question: what is Wall Street missing? What is concerned about? Since you can't identify it, I'm going to go right to the heart of the matter, and that is there's a concern about the need for a capital raise, Michael. Stifel put it the most bluntly, I think, out of all the Wall Street research I've read so far. We believe Aurora will have to come to the capital markets by calendar year first quarter 20 for a significant ask to fund the aggressive growth agenda. What can you tell us about your cash needs going into next year?
So we certainly haven't made that decision that we need to raise a material financing in the early part of 2020. We have a strong cash position at year end. Subsequent to year end, we upsized our debt facility by another $160 million to $360 million. We have not drawn fully on that facility. We also sold what was a strategic investment initially in TGOD, our 29 million shares. That also put, on a non-dilutive basis, $86 million gross on our balance sheet. So we think, coupled with our year-ending cash, plus the cash that we put in the bank subsequent to year-end, that we're in a very, good position to continue to execute on our strategy. We're obviously, I think our cash needs are more driven towards our CapEx requirements. But we have the ability to, ramp our capital needs as we see market demand. So, if we see market demand increase, of course, we're going to accelerate some of our capital need or CapEx requirements, and obviously that need to raise or to inject capital in that part of our business. And so we will do that in a very careful and thoughtful way so that we don't put ourselves in a position where we have to raise material money in order to continue to fund our business.
Let me underscore that what you said in the first part of that answer, and that is you have not decided whether to go back to the markets and ask for more money. That's still on the table.
That is. Look, at some point, in the future, as we continue to grow our business internationally, we believe there may be a need for future capital because we're going to need to continue to expand, build facilities elsewhere around the world. So that is a future, idea for us. So that there's at some point we believe that may be true. I don't think we have the need to do so today, and obviously we're planning to continue to grow our business with the existing capital that we have.
Let me focus in on the back half of the year, particularly in Canada, when edibles and vaping become legal. They become new products for you to sell, to distribute, et cetera. Won't you have to ramp up spending going into those launches, those legalizations towards the end of the year? And can you tell us about your need to spend on CapEx, because it already seems like your SG&A is going to go up fairly significantly, as I read on the conference call transcript, to 9% from 1% last quarter.
So yeah, we've already started investing in the sales and marketing efforts that we're going to need to launch our derivative products. We're very excited. We're already preparing for that. We're already we're already producing the products that we're going to launch later this year. One important point to note is, why we think this is going to be very profitable for the business is we're trending very well in the consumer market in Canada. We're number one in some of the key provinces of Ontario, Quebec, in BC, and we're number 2 in Alberta, and so on. So, and we believe there needs to be a greater rollout of retail outlets, what looks like, and we're encouraged because that seems to be happening. So with those things playing out and the launch of our derivatives, which are higher margin products, we're very confident that we're going to have the right or the ability to generate in the second half of our fiscal year some significant revenues relative to those new form factors coming out. And so that's where we're really focused on. We're investing in that infrastructure today to ensure that we have what we need to deliver some real, some real sales numbers in the second half of our fiscal year.
I need a 30-second answer. How worried are you about the health concerns that have blossomed up around vaping most recently?
So personally, I'm very worried about what I'm reading in the U.S. In Canada, it's very different, and we're obviously, we're heavily regulated by Health Canada, which is a good thing. We work closely with Health Canada to ensure we're going to meet or exceed the Health Canada requirements. When it comes to vaping or vaping products that we're going to be launching, we're going to be testing every one of our products to a rigorous standard to ensure that the products we offer to consumers are safe. And we feel comfortable that we're not in any way, putting at risk our customers and our patients with regards to our new derivative products.